My name is Marcus Boijemyr. I'm CEO and fund manager for Almi Invest Stockholm region, and we are a pre-seed seed investor, by far the most active. Actually, we do between 50 and 70 investments, so we are very active throughout the whole of Sweden. The early phases in the market entry, trying to find the product market fit, getting the first team up and running and the first customers there. And then when it's time to scale the business even more, you usually bring in later stage investors. In these early phases, it's really about the entrepreneurs and the teams. We never invest in single founders, besides that it needs to be a market that has the potential to really scale and create the value needed for bringing in VC capital. Then at a later stage, investors can start to bet on the traction or the revenue or even the unit economics, depending on where you are. But initially, it's so much about the team. So we looked at the 350 investments or exits that we have done and looked at, I think it was 15 hypotheses about what makes a good investments or a less good investments. And 6 of these came out as significant in our study. And the first one is really, a deep tech company. And maybe that's because it's our primary focus, I would say. So we have a history of doing a lot of deep tech investments. But if you have a business that has the ability to build barriers to entry efficiently, it might be that it's, based on research or patented, but it can also be that you build barriers through data or through other means. So it doesn't have to be deep tech. But for us, deep tech has been a significant driver for good investments. If we want to sacrifice our money and take a risk, we want you to take a risk. So the companies that have founders with really skin in the game, who had sacrificed something themselves, missed salary, invested their own money, or whatever it might be, those investments turn out better for us than others. Growth markets that grow more than 10% was the definition. So really, what it means, it's easier to grow a business if you don't have to take market share from your competitors, but that the actual market growth is supporting your growth as well. We are industry independent, as I said before. So if we bring in investors that really knows the specific industry, those investments has turned out better. So that says something about, if you bring in angel investors or investors early on, don't just think about the money, but think about the smart money as well. They should be able to support you with more than just the capital. Team setup, I mentioned that, and that is important, not to be a single founder and have a team set up with diversity and mixed competencies that are complementary, basically. And then if someone in the team has industry-specific experience from the market that you're targeting, those investments turned out better for us. So if you tick these 6 boxes, you really stand out. Very few do. So that's something to think about. These are the 10 main things we want to see. So, come with a presentation with 10 slides. That's usually enough. The background, why are you doing this? What's the problem that you're trying to solve? What's your solution? Why now? So basically, what are the mega trends or the things out there that is supporting you? Why is this a good timing? So time should be your friend, not your enemy. That's what we're looking for. We look at the market, the size, the growth, the speed of change in the market. We look at the competition. We want to understand your take on the business model and how you should sell this, basically, how you should go to the market. The team, usually want to see 3 main competencies within the team initially. That should be the visionary person or the CEO. Usually it's someone who knows the technology and someone who knows sales and marketing. Those are in principle the 3 main competencies. And then the financials. It's not so much history usually in the companies when it comes to financials, but your take on the capital need, your projections for the business, and what type of valuation that you're looking for when you raise money, basically.